no energy crises in sight, no recession, but also no bull markets in metals. Oil is not going to be going up, natural gas is not going up, copper is not going up, uranium is not going to be going up. That's kind of what I'm getting from your recent pieces, Doomberg, that you've been writing, and maybe I'm interpreting you wrong. So we'll talk about all that and then some. And then when we're done in about 45 minutes or so, I have Mark Saxon on from T2 Metals. He on the CEO barbecue, and I'm gonna grill him about his quest for copper and zinc in Manitoba. I think that's going to be a long interview because I have quite a lot of questions. So I'm thinking 90 minutes ish. Still not quite the 4 hour episode this week, unfortunately. I'll try to get one out next week. But Doomberg, you and I spoke about 6 months ago, I believe. And looking back at it, the title of the conversation that I published basically just summarized your take from the interview. And not everyone agreed. Well, a lot of people in the comments actually disagreed with you. So I want to ask you about some of these things as well. But the title read, and I quote, long gold, short energy, cautious uranium, suspicious copper. Again, that was about 6 months ago. It was at the end of February when oil was close to $80 at the time. It's about 75 now. So, well, it is down, and it's down $5. Was that something over 5%? Natural gas is basically flat. Coal is up a little bit. It's about 10% or something along those lines. Gold at the time had just crossed 2000 when we were talking, and it's now above 2500. It's actually well above 2500, strongly, nicely, very good. So that's up 25%, I believe. Uranium was $100 at the time. It is rounding down to about, I want to say 85, something among those lines right now. So that's down some 15 or 20%, depending on how and where you get your pricing from. Uranium is kind of tricky. Copper was about $3.80 at the time, though. It's done well. Well, it's 420 right now, so it's only up about 10%, but it did at one point get to over $5. It was $5.10 to be specific, which was a 35% gain measured to the high. So mixed predictions here, I guess. But is that how you'd frame it now if you were to do it again today?
Yeah, so first of all, great to be back. And I think I counted 5 out of 6. That's not a bad batting average in this business. Typically, 55% gives you a significant source of alpha. So I'll take it. But broadly speaking, of those markets, the one we follow the least is probably copper. We only follow copper for signs as to whether the market believes the so-called green transition will amount to much. And for many years, we didn't really see much in the way of follow through from the copper markets that would indicate that we would have a massive shortage due to the electrify everything movement, which is the primary signal that we try to get from the copper market. The ebbs and flows of prices generally is a little bit more challenging to predict, as anybody who participates in the market can attest. But if we were to survey the landscape of the energy markets today, oil is at the low end of a managed range. People forget that there's literally a cartel that is working very hard to set a floor to the price of oil and they try to keep a ceiling to the price of oil as well. That's a bit of a misunderstanding. The OPEC does not want $150 oil either. They'd like to keep it in the $70 to $90 range and closer to 90 if they can. Oil looks relatively weak at the moment. Crack spreads are very, very low. The market seems relatively well supplied, and there's just an enormous amount of oil in the ground to be developed. So because it's a managed market, it's difficult to predict prices. If it breaks through 70, I think the next level of support is probably 50. But for it to break through 70, I think we would need to see either a slackening of discipline in OPEC or a true recession in the U.S. And one suspects that the Fed and U.S. Treasury will do everything in their power to put off a recession, at least until the election. Natural gas, still a glut in the U.S., relatively tight overseas, mostly some geopolitical risks with the incursion into Russia by the Ukraine armed forces. There's some worry about gas getting to Europe this winter. Coal is relatively flat, as you mentioned, well supplied. China has a significant inventory of coal. And one of the challenges with coal is you have to sort of predict the weather in Sichuan province, for example, because China does toggle between hydroelectricity and coal, depending on the weather, and that can be difficult to model as an investor. So overall, I'd say the markets are relatively well supplied. We are certainly not in anything remotely like an energy crisis anymore. The U.S. natural gas situation in particular looks rather challenging for producers, and we could get into the details of why. And then finally, gold. It's been quite a run. We don't invest in gold to try to capture price moves. We use gold as a medium of savings. And we view gold. Gold is the one asset that I own a lot of that it makes me uncomfortable when it goes up too quickly, because it usually signals something else going on in society that will negatively impact the rest of my portfolio in ways that I might not be too happy with. And by portfolio, I mean my broad standard of living. I think the gold has been on a run, and typically if you were trading, it feels kind of like uranium did the last time I was on. It rallies end when everybody's in, and I'm starting to see the price of gold being quoted in news periodicals that don't typically cover it, which is sort of a potential contrarian indicator. But I still, I don't trade it. I own a lot. I put a fair bit more on during the last pullback in, when the Japanese stock market plunged, and gold was sort of had a little mini sell-off like all of the other QSIPs usually do. Correlation goes to 1 in such circumstances. So yeah, I'd still own a lot of gold. I wouldn't be particularly bullish at this price point, and the energy markets are well supplied.
Uranium's left to be talked about, and we will towards the second part of the interview. But what's interesting to me here, and it was the same thing last time, is that you told me that you own a beakful or a fluk ton of gold when last time, but you didn't expect to see a recession, and so you said I'm cautious copper and I own gold, which typically when you put on a trade like that, you're saying the economy is not going to fare well because copper, Dr. Copper, yada yada yada, gold, the feeder trade. So how do you reconcile that?
Again, I don't trade gold. I save it, and so any excess profits from Doomberg or other business activities, or if an investment has a liquidity event in one of our private investments, then I will typically allocate some portion of my income towards steadily acquiring gold, sort of dollar cost average in over time, and then opportunistically buy a fair bit of it when I think it's artificially pulling back for reasons that have nothing to do with the fundamentals. I measure my net worth in acres and ounces, not dollars. And so I view the land that I own and the collectibles that I own and the gold that I own as putting a floor under my personal net worth. I like to tell my children, who are probably tired of hearing it, that 20 gold eagles will buy you a nice mid-sized SUV today, and it'll buy you a nice mid-sized SUV in 25 years. And 20 American eagles. I view the price of gold as more of a measure of the price of the US dollar than I do the price of gold.
What collectibles are we talking about? I've heard you mention that before. Got me curious.
Anything that you can study, that you enjoy studying. I enjoy studying the watch market. I enjoy, I'm just getting into collectible cars. There are certain brands and models that you just have a hunch are going to maintain their value pretty well. Generally speaking, I like to buy used cars when the average price of a make and model sort of seems to be bottoming out on Bring a Trailer. That's about the right time to start buying. Like a car right now from the mid 90s is just about like a nice high-end car from the mid 90s would be, making that transition from a used car to a collectible car. And so, because if you buy a new Porsche today, of course, it's going to, there's going to be that initial depreciation. But if you buy one from 15 or 20 years ago, you probably caught the bottom of that depreciation. And then if you know if you study particular makes and models well, and you read the forums, you could get some edge. Other people that I know like to collect art. I find art to be a bit more difficult for me to gain any kind of an edge. And then just land, real estate, know your local market, things that I could touch, like I could drive to my properties. They exist.
I like cars. I'm into cars. I like watching these car reviews on YouTube because that way I can see what kind of car I'll be able to afford in 20 years. But what I'm thinking here also is that recession call. I mean, you said you didn't expect the recession in time for the elections, and to change anything massively. And that's coming up way close right now. So I mean, and it looks like, well, some people would argue we are in a recession as is. I mean, maybe maybe you're not seeing it in the data that the government's giving you, but then people are saying, oh, shadow stats and whatnot. That's where you can see the real recession. What do you see happening there? Do you still think we're not in a recession, and do you
I
see
think,
us going into one?
yeah, I don't think we're in a recession. I think that call, which was based on the fact that in the US, natural gas is so important to the front end of manufacturing and it's so dirt cheap, it's selling for the equivalent of $12 a barrel oil, that those typically aren't ingredients for a recession. And then also, it must be said, not that these are policies I agree with, but Congress is running a huge deficit. And Janet Yellen in Treasury is doing all kinds of shadow um, liquidity injections using various tools and techniques that don't necessarily find their way to the front page. I think they are pulling out all of the stops to keep Donald Trump out of the White House. I mean, let's be, not that we're political, but I think objectively, I think that's a pretty relatively safe assumption to make, that they will behave in ways that prop up the economy to get past the election. And that was our call. After the election, all bets are off, especially if Trump wins. I think they might kitchen sink it. And so I think we will have a recession. The business cycle still exists. And the fact that we've postponed it for as long as we have might mean that it probably will be severe. I know it's going to be very, very challenging for the US fiscal situation once we do enter a recession, because the deficits will blow out even further, making, we got a lot of debt to refinance in the next 5 years. And so we're setting up for a catastrophe. We made a very specific call that when energy is dirt cheap, the Feds are running huge deficits, and both Treasury and the Federal Reserve are politically motivated to keep the incumbent party in office. Those are typically not the ingredients you would need to make a recession.
Hmm.
And I think we will be proven right on that particular call. Well, you need 2 consecutive quarters of contracting GDP growth to be in a recession, and we're not going to have that before the election. So, but that's not to say that we are perma bulls. I just think that when the governments are spending as much as they are, and when energy is cheap, generally speaking, you can limp along.
The fact that energy is cheap and abundant, as you call it, do you think that the performance in oil specifically, do you think that does anything to slow down or speed up what's labeled as the green energy transition, in a way that you see kind of in a similar way where you see copper prices lacking, and then you say, oh, EVs are not going to get adopted as quickly as we think it is, because if they were, copper would be higher. Well, can you derive the same thing from looking at the oil price?
Well, again, oil is managed market, so we have to be careful taking price signals from oil and projecting macroeconomic indicators from it. I mean, you have to be aware of them, but oil is managed higher than it would be trading right now if OPEC were not a thing. But OPEC is a thing, and OPEC is 35% of the market. Our sort of standard way to estimate what the equilibrium price of oil would be, it's kind of matching out now. 5.5 times landed LNG in Europe, and so we're looking at around 60 to 65 today. So it's relatively balanced. But if OPEC had no discipline, oil would be in the 40s or 50s. And the Permian producers are taking advantage of that discipline by producing as much as they can, which is driving the glut in natural gas in the US. And again, natural gas is underappreciated by macro economists, but there are hundreds of cogeneration facilities in the US that use natural gas to make both electricity and heat to drive industrial processes. And they are extremely well advantaged right now compared to the rest of the world. And this is just, again, like the chemical industry, the fertilizer industry, and all of the downstream companies that serve them, cement makers, steel makers. Like when you have $2 a million BTU negative prices of natural gas in the Permian. You're going to see a boom in AI here. You're going to see a boom in data center construction using natural gas. And so when I look at oil in particular, I see a managed market, and then I look at the second and third order effects of that.
But at the same time, there's still a demand piece to it, right? I mean, the demand still influences oil prices, like we saw in 2020, at least for a brief period of time.
Oh, of course, yeah. Oil is highly inelastic, and if we are going into a recession, as some of the people who thought that our call was wrong, people have been expecting a recession for the last 18 months, right? This is right. I mean, that's because everyone assumed when the Fed was hiking that it would, it would break the economy and et cetera. If we do have a recession, then look out below for oil. Yeah, for sure. I mean, and so, or frankly, if China has a breakthrough in developing its shale, or pick your favorite sort of supply side, where they would satisfy their own demand, and therefore they would no longer be sort of marginal buyers in the import-export market. That's a long ways away. I'm not calling that, by the way. I'm just saying those are the types of events. And also, frankly, for oil, we're seeing a lot of engine switching, which is another call we've made that was controversial. But I saw a report just last week that somewhere around 1 million barrels a day of diesel demand has been switched to LNG in China. They were literally driving long-haul trucks using LNG, natural gas powered trucks. And that's real. Like, inelasticity of demand for energy feedstocks is a real thing. And we're seeing engine switching as we predicted. I mean, the natural gas is not going to be given away forever. They will just change the engines. Both oil and natural gas are burned to create heat to do work. The particular suite of engines that we have to burn those fuels to do that work will eventually be fungible enough to account for the fact that natural gas is given away in some parts of the world, and oil is still relatively expensive because it's a managed market. And it doesn't take much. That inelasticity works both ways, as we saw in 2020, as you correctly pointed out. We went from negative gas prices or negative oil prices at the height of COVID to $135 a barrel within the span of what, a year? 2 years? Yeah, 2 years, I guess it is. History, boy, flies. But yeah, so I do think if we go into a recession, as many people believe we are, or if the U.S. enters into a fiscal spiral, which is totally possible and something we're thinking about writing about, then you will see a downward pressure in the price of oil. If you want to see the real price of oil, just plot it in ounces of gold. Oil hasn't been this cheap in 40 years, outside of COVID, aside from the COVID fiasco. But the price of oil in ounces of gold is dirt cheap. And so, like, here's a fascinating thing, Antonio. The number of people who think that the government is making up inflation statistics. By the way, I count myself among those people. I think they're heavily managed. Let's put it that way. Not necessarily making them up, but they are managed. And the same number of people who, like, the overlap in the Venn diagram of the number of people who think government is making up inflation data and also think peak cheap oil is here or near, then explain to me why oil is $70 a barrel. Like, on an inflation adjusted basis, oil is as cheap as it's ever been. And the way to truly measure that is to just take the price of oil and divide it by the price of gold and plot a 50-year chart. And you tell me, is oil expensive or cheap? It's dirt cheap. The fossil fuel industry are great deflators.
But essentially it comes down to price is truth, unless it's a managed market or a market that is as managed as oil is.
Yeah, price is truth, but even their ability to long-term sustain the management of that market, we have doubts. And the wisdom of having managed the price to be elevated for as long as they have only drives that arbitrage, the technology of engine switching and so on, the broader utilization of lighter hydrocarbons, which is what we're seeing around the world. They will eventually, the arbitration is a really arbitrage is a really powerful force. And again, they can't manage the price of natural gas in the U.S., right? And we have a lot of it here. And every time we produce a barrel of oil in the Permian, we get more of it. We have so much natural gas in Canada that we said in a recent piece that the supply base should be modeled as effectively infinite for the next couple of decades. The only gating function of production in natural gas Canada is partisan politics in Ottawa. And by the way, let's be totally transparent. The fossil fuel sector has no discipline. They've never had discipline. They've never demonstrated discipline. They will produce. They'll produce into negative prices. They know how to spend capital and they know how to drill. And so rare has the sector, especially in the US, shown any discipline whatsoever.
I know how to spend capital too, by the way. I can show you if you need help. But the responses to that gas piece must have been the emails you've gotten must have been very fun to read. But essentially, what it comes down to here is that you don't think the state of affairs is as solid. Speaking of which, this is, you see what I did there? This is my attempt at nice transitions into talking about batteries. I just read your piece. What did you published it? You just published it, actually. State of the affairs is not as solid, and breakthrough batteries are not just around the corner as we've been told. Is there somewhere within price charts or something else that you can confirm that with? Like, where is that belief of yours coming from?
It comes from decades of industry experience reading the exact same headline over and over and over again. I mean, look, you could go do this experiment after this podcast. Google battery breakthrough and then set the range to 2005 to 2006 and read the news articles. They are word for word what we're reading today. Look, this is something that I have direct personal experience in. The development of batteries is a tough incremental slog. The combination of energy density and safety and recharge speed is a very, very, very tough nut to crack. There's no such thing as a battery S-curve. Anybody who talks about S-curves in battery technology development has never worked in battery technology development, I can assure you. So about every year, we get what we call the science hype cycle, where we see a dozen articles beaming about some breakthrough. And in the past, well, we said in the piece, we've been 3 years away from solid-state batteries for at least 4 decades. I remember in the 90s fielding questions from my CEO. Hey, I read about solid-state batteries in the Wall Street Journal. Is this real? Here we are in 2023, and we are still N+3 years away from the first introduction of solid-state batteries into vehicles. And as we said in the piece, look, I'm a big fan of solid-state technology. Would love nothing more than for it to work. But by the time it will work, we won't need it. I mean, China is so far ahead on battery development. We profiled in that piece. BYD has a plug-in hybrid electric vehicle that is handsome, well-appointed, costs $14,000, and could go 2,100 miles on a single gas tank and battery charge for $14,000. Solid-state batteries are going to be expensive. And by the time they get to market, there's only going to be one parameter that they're going to compete on, and that's price. And by the way, if we continue to de-emphasize full battery electric vehicles and migrate towards plug-in hybrids, that changes the dimensions of what's needed from batteries in a meaningful way. If you have a plug-in hybrid with a small battery and a gasoline engine to back it up, then you don't really need to worry about recharge speed because you're just going to trickle charge that battery overnight. And battery energy density. The only thing you really care about is cost. And solid state's never going to be able to compete on cost. And we're seeing right now the market is moving towards plug-in hybrid as a real bridging technology, which is, I think, why copper has been so well behaved.
What happens to battery metals in the meantime, though? I mean, some of them are, if we keep speaking within the concept of price is truth, some of them are trading at completely unsustainable levels for Western production or for clean production, as they want to call it, to be able to make a decent ROIC, right? Wouldn't that cure the low prices soon enough?
Yeah, well, there's another proof point that the market doesn't necessarily believe that the future is as green as we've been told, right? Show me a price chart, maybe nickel, I don't know. Show me a price chart that is evidence that we will meaningfully undergo an energy transition. So here's like, you could just look at the statistical review of world energy, and for our approach here, we did a full deep dive analysis of the 2024 edition of that wonderful document, where the world is still using fossil fuels to power 83% of our primary energy. That's basically unchanged. It's like, we use, put it this way, all primary energy sources are additive. Humans will consume every BTU of energy produced because energy is life. Energy controls your standard of living. So if we don't consume it in the US or the Europeans don't consume it, guess who's going to? The Indonesians, Chinese, the Indians, the Pakistanis. Coal set a record in 2023. Natural gas tied a record in 2023. Oil set a record in 2023. Show me this transition that everyone's talking about. The gating function of fossil fuel demand is fossil fuel production. Every molecule of fossil fuels produced will be burned by somebody somewhere, and local restrictions against such activities merely change who gets to enjoy that privilege. Coal mining determines coal burning. It's just that simple. If it's mined, it's burned. And so, and by the way, this is why Europe's energy policy makes a little sense. They don't produce any. They don't produce any natural gas or coal. Now, Norway does, but Norway's not in the EU. And the British still produce a little bit, but they're not in the EU. The European Union itself produces virtually no gas, virtually no oil, and a little bit of coal. What Europe does is totally irrelevant to global carbon emissions because it doesn't produce any fossil fuels. So back to your question about battery metals, like show me a price chart that says internal combustion engines are going to be banned in 2030. I just don't see it.
What Europe does is irrelevant most of the times, not even only when it comes down to energy.
Well, they're a great bad example. So
yes, and we do make these bottles with the special caps. That's of course that's brilliant. I have one here actually. They're horrible, but we're gonna save the world. I mean, I have high hopes for it. Show me a chart that says that we're gonna have that energy transition. Well, that chart's not there, but is that maybe because there's a belief that governments will always step in? As in, where does government support come into your analysis process here? Because like it or not, it seems like besides forbidding us to dislike or even discuss renewables, some governments are willing to throw money at the issue of there not being enough domestic supply of what they call critical minerals. A lot of them are battery related or energy transition related minerals. So where do governments come into your mix here?
So first of all, the government is going to waste a tsunami of cash on this. And so I don't want people to mistake my bearishness on the green energy transition from the fact that the government is going to waste an enormous amount of money chasing these unicorns. I mean, that's just reality. And if people want to play that, but that amounts to a greater fool's trade. I mean, you have to know that there's no real economic value being created, and that's just grifting from the government. And so, but the role government plays in this case is in the form of regulations, right? And so we see things like the Inflation Reduction Act in the US distorting markets significantly. We see it's very difficult to get permits, for example. So you have to pay careful attention to what the government is doing, even in Europe, because these are all interconnected markets with very, very highly inelastic interdependencies. And so what happens in Europe still does matter, as we saw with the energy crisis that started in Europe, spread across the world rather quickly. For example, Europe screwing up its natural gas storage led to a price spike of polysilicon in China. And I could walk you through all of the interdependencies that led to that. And so, yeah, of course, you have to pay attention to government, and they're going to put their thumb on the scale. And as we wrote in a piece this morning, the UK looks set to repeat Germany's experience in the energy markets, and they're going to take a swan dive off a cliff. And as you alluded to, you better not complain about it, or else you might end up in jail.
Well, I'm only laughing about it because it's funny, but it's really not funny. So essentially, you think that the U.S. or Western governments as a whole are over-investing in, again, what they call green energy solutions, and but that's eventually going to turn around and bite us, right? In some way or form, as additional taxes or inflation.
I would say the main point I'm trying to make is that even though they're investing in wind and solar, oil and gas and coal are still going to be in high demand all around the world. So in other words, any oil or gas not burned in Europe, not burned in the US, is going to be burned somewhere. And so unless and until you forbid production, you're not going to impact demand because the world will eventually burn everything that we produce.
Well, but and this is more of an opinion or a gut feeling, if you will, that I'm having. But it almost feels like by focusing and focusing at, at time on the energy transition narrative, if you will, if you pushing it into the present more than it needs to be, given its reality. The reality of it is, I don't think it's as pressing of an issue as MSM and governments will have you believe. We're losing track of the present reality in which we have to live today, and so literally today and literally tomorrow, right? So, well, I don't necessarily have a question, but do you agree with that? Do you think that policymakers are about to run their economies into a black forest, which they didn't see because they were focusing on the proverbial green trees that are 17 miles down the road?
Yes, I think Europe is doing that. The US is different because the US still has a lot of autonomy at the state level. And so states like Texas and Louisiana can be, as long as the molecules don't flow across state lines or international borders, um, the states have a lot of say in permitting and so on. Now, the
Hmm.
federal government is trying to become to get a bigger seat at that particular table, but there's huge resistance to that in the US. And so this is why you have California and Texas with basically the same resource base, but radically different production because California is a blue state and Texas has historically been a red state. And so, but outside of the US, yeah, I think like the piece we wrote this morning about the UK and Miliband, I think that we're going to see. Look, I mean, you can't be rich and energy poor. It's just
Hmm.
that there's no such thing as an energy poor rich country. A few, financial safe havens are, as exceptions, but by and large, a meaningfully sized country cannot be rich if it's energy poor.
Hmm.
Um, and so, and by energy poor, I mean you have like literally BTU drives GDP. So you can import energy. You don't necessarily have to produce it, but you better be good at high-end manufacturing, like South Korea, for example. If you're going to be a significant importer of energy, and they are, you better have some high-value-add activities to pay for those imports. And also, you need to be acutely aware of the geopolitical risks of security of supply. But if you just look at BTU per capita, you could see the rich countries and the poor countries. So the correlation is near perfect.
Monaco feels seen. Um,
Yeah, yeah. Look, I mean, there's these uh, pick your favorite financial tax havens, and there will be
hmm,
some extra wealth there, and not much in the way of energy. But if you look at the top 30 countries by population size, for example,
right.
the correlation between energy use and GDP is near perfect.
Hmm. Are you paying attention to rare earths and what China's been doing with germanium and gallium? And not only what was happening a year ago where they're curbing the exports, but what's happening now is they're being rumored to be secretly, if you will, stashing away germanium and gallium. Are you paying attention to any of that?
Yeah, I think again, this is an example of where China um, has a bit more of a strategic view than we do in the West, and we're sort of driven by quarterly financials and the expectations of Wall Street. Um, they have a monopoly on rare earth metal processing. So even if we mined rare earths here, which we're just now starting to think about doing, we still have to ship all of that concentrate over to China for them to convert it into purified metals for use in things like magnets, which would be used in things like wind turbines and electric motors and so on. And they have a monopoly on that, like a literal monopoly on it. And so all rare earths that find their way to the market must pass through China. And that comes with strategic advantages. Look, one of the market failures of a free capitalist society like ours, so relatively free and relatively capitalistic, less so with each passing day. One of the market failures is an inability to properly price in national security.
Hmm.
Um, and so we don't want to do the dirty business of purification. Like purifying concentrates of rare earths into pure metals is a very environmentally taxing endeavor. Produces an enormous amount of wastewater. It's energy intense. If you cut corners, it can be very polluting. And so China does it. Like we wrote a piece last year called Geopolitical Warfare, where China's willingness to pollute gives it a leg up. Like we don't make magnesium anymore. China does. Magnesium is critical for aluminum composites, which is critical for the automotive industry, and they have a monopoly on it effectively. Carbon, you know, pick your favorite. Like when you look at the critical minerals, especially for the so-called green transition, China has a near monopoly. China has 97% share um, in ignite manufacturing and wafering in the polysilicon sector. So basically, virtually every solar grade polysilicon that's produced in the world, whether it's produced in China or not, goes to China and gets commingled with solar grade polysilicon that is produced by slave labor and all of that nasty stuff. And so literally every solar panel in the world is passes through China. They occupy strategic nodes in supply chains, um, and they're smarter than us about it.
Does that make you bullish on germanium and gallium, or it just kind of pushes you into thinking about it, kind of like OPEC controlling the oil market?
Well, I wouldn't know how to trade it, so whether I'm bullish on it or not probably doesn't matter. But um, I would say that I'm bullish on China cornering important markets that we will wake up one day and regret having allowed them to do so should conflict ever break out between the US and China.
If you're saying markets with an S, a multiple, what other markets are you talking about?
I mean, I wouldn't know how to. Oh, you mean other critical minerals?
Yeah.
Yeah, I mean, just if it's important to the US military, China owns it. Like you just go up and down the list. We outsource an enormous amount of our military industrial supply chains to China. This is like one of the dirty secrets. We can't go to war with China. We can pretend like we can go to war with China, but they have a lot of economic power over the West that we have given them, to be perfectly transparent. Like we have allowed this to happen. We used to have a giant magnesium production facility on the Gulf Coast of Texas. Not there anymore. China basically flooded the market and it went out of business. There used to be an entire healthy solar supply chain in Western Europe and the US and Canada, and it doesn't exist anymore because China took it over. I was in the market when China took it over. They stole our IP. They selected local champions. They gave them enormous subsidies, and they flooded the market with artificially cheap solar panels until everyone else went out of business. And that's how they get 97% share in 3 of the 4 first steps in the solar supply chain. The second, third, and fourth step, going from solar grade polysilicon to ignites to wafers to cells, China has a monopoly on. So if you're buying a solar panel, it went through China.
They do eventually have to make money on that. But does that mean that they're not going to be making any money in the raw materials? They're just going to make money on the final product, and therefore the raw materials that go into these things are going to stay cheap for longer?
I mean, do they really need to make money? Again, they are properly pricing geopolitics into their national economic strategy. Right? I mean, look, I think there's a lot of problems with China, and we're doing a deep dive on China's energy situation for our upcoming Pro Talk for August. There's a lot of challenges with China. Centrally planned economies usually don't do well in the long run, and so on. But they're willing to take a loss to own a supply chain if they think it's geopolitically advantageous for them.
Right. Well, maybe I'm just approaching this with, as you said, at least partially a capitalist brain who thinks about, well, someone's going to make money here.
Just print it.
Yeah, just print it. Yeah, it's true. What about uranium in the meantime? I mean, last time we talked about that as well. You said you're cautious. You're right. It kind of hit an intermediate top somewhere at around $80, but what's happening? I mean, things are happening now geopolitically, Niger, Kazakhstan, a bunch of other things. Where do you see that?
I think there's a risk of a major nuclear incident in the Russia-Ukraine war that I would be careful about getting too much exposure to uranium at this point. There's a lot of fog of war. There's a lot of propaganda, but there was a fire at a Russian-occupied nuclear power plant that Ukrainian claims is, Ukrainian territory. This recent push into Kursk by the Ukrainians, some think might have been motivated by an effort to try to seize and occupy a nuclear power plant inside of Russia. That would have led to a massive geopolitical, very, very tense situation, let's say, to say it lightly. So I think there's lots of reasons to be bullish uranium. I think that the nuclear renaissance is real, but there has to be a acknowledgement that we are one major military shelling of, or a major incident at a nuclear power plant away from another Fukushima.
Hmm.
And so I would, it's not likely, it's not our base case, but it's a risk that I think needs to be on people's radars.
It, that's been part of the war, though, since the beginning. Means Zaporizhia was getting shelled pretty much day one,
Yep.
and nothing really happened there. So yeah, well, how big of a risk do you think that is also part of the question here.
I mean, I think it's not a risk until it happens, and if it happens, all bets are off, right?
Hmm.
Um, and so again, I think if you're asking me for a measure of why uranium has been treading water in a slightly downward direction since we last spoke, I think that has to be at least part of the explanation. Because
Hmm.
nobody wants to wake up to another Fukushima being long uranium, right? And so even though it might be low probability, the consequences are high. And so the expected value, the sort of the risk premium embedded in the price is not insignificant in our view.
But what happens though? I mean, what if, like, what if we have a nuclear accident that's not due to nuclear power, but due to the war? What's the real life outside of the sentiment impact that's going to have on nuclear energy? What's the real life impact? Do you think we see current build outs getting halted? Are we going to see more closures of nuclear power? Like, why do you see that as a problem?
I see a lot of the same forces, the sort of dead cat bounce of the Malthusians who oppose nuclear would have one more really hard swing at it.
Hmm.
If a nuclear power plant loses containment and radioactive material leaks from it or whatever, because of the war, that would be a very bearish event for uranium.
Hmm.
Not
So
just for sentiment. I think
okay.
that governments would probably put a hold on things, and the Sierra clubs of the world would be, "See, I told you so," and they'd be all over the news, and governments would overreact. Um, and I think hydroelectricity dams collapse and kill people all the time, and we don't hold that against hydroelectricity as a technology, but for whatever reason, the history is
Hmm.
very plain that we do for nuclear, and we will again. That's our view. Look, it's not our base case. I don't think it's going to happen. I certainly hope it doesn't happen. If you're just asking me to explain why it's been treading water, I think that's got to be at least part of the reason.
Right. Well, so if I were to sum up the title from last time, it's basically the same. It's short energy, long gold, cautious uranium, suspicious copper, and suspicious all the other stuff that are related to the energy
Yeah.
transition.
And I'd be a little suspicious gold given the run we've just had. Things don't
Hmm.
go up in a straight line. And so if there's one change from last time, I would say that I wouldn't be putting much more on at these prices than I already own. That doesn't mean I'm bearish. I'm just cautious.
Good. Well, you told me you only have about 45 minutes. I think we've been on for like 44 minutes or something along those lines. So I have follow-up questions, but I'm not going to take away your whole day. What else are you working on? You mentioned something about your August pro tier program that you're going to be putting out. What else are you working on in the meantime?
Yeah, so we have the Pro tier, which we do once a month for our premium segment. And then for our regular subscribers, we're putting out 8 pieces a month. The next piece we're going to publish is a very interesting one um, on how activity along the Colorado River may have inadvertently put a price on adaptation to climate change, which was very interesting, and what that price actually is to adapt to negative consequences of climate change. After that, we're actually probably going to write a piece about how precarious the gasoline situation is in Northern California. It's a really remarkable story. So there's never a shortage of things for us to write about in the energy sector, and you can find it all at doomberg.com.
How are you finding is there anything really that you can read out of the way that your business has been going that you can kind of see how the sentiment is on the energy markets? Are you seeing inflows of new clients, or what are people telling you?
Um, we certainly grew a lot more when the energy crisis was live. But we have a very healthy business and very proud of the business we've built. We have a great and growing subscriber base. And so we don't really concern ourselves too much about the ebbs and flows of our business because it's way more than enough. And we get to do what we love every day and make a healthy living doing it. I mean, what a privilege. That's the literal definition of rich. And so I only work with people I love on stuff I love doing, and what a way to live.
How many people do you have on team right now?
We're a very small team. We like to say that you could count the number of Doomberg members on one hand with a few fingers left over.
Yeah, and hopefully next time we do talk, we can actually talk about some positivity in the uranium space. I'll let you drop off now. I understand you have to go. Thanks again for doing this. This was great. But also, what else is great is this next part of the energy transition talks episode. That's what I'm trying to call these episodes. So I have the real money talks episode, which talks about gold and silver. This is the energy transition talks episode, talks about everything that is related to energy transitions. Let me know if that's not working, if I'm doing something wrong, or if you don't like it. Let me know what you'd call it. But of course, my favorite part is the CEO barbecue. But my really, truly, secretly favorite part is the disclaimer that comes before the CEO barbecue, because it's a fair warning. There is a warning on your screen right now that you're obligated to read, but you're also just best served by actually reading it, because it's not just some random disclaimer that this is an actual warning. I strongly believe it will help you not lose money if you pay attention to it and you actually respect what's written in there, which, by the way, is the norm and should be the expectation in this sector. Losing money, that is, not reading disclaimers, and that's part of it, right? I am here to make money. Money is always going to be part of it when you're dealing with these things, and I make money from the existence of this channel, and specifically from companies paying for the production of these interviews. The company that you're about to listen to when Mark is here, that'd be T2 Metals. T2 Metals has paid for the production of this interview. Okay, that I don't share any questions with them up front. There are no questions off the table. As you see, I try to be as annoying as possible, so I get to ask whatever I want. There's no editing rights for the companies and yada, yada, yada. But that doesn't mean you should look at this as research, or you should look at this as, at least of all, as recommendations, okay? Because this company is here as a part of their marketing program, as a chance to do some marketing, right? So start by understanding that most companies, most company communications, I want to say all company communications, is marketing. That can be their news release or their presentation or an interview, or there's an influencer talking about it. That's all marketing. And their Twitter account and whatever else it might be, and people talking about it on billboards, you don't know who's paid, who's not paid. That is all marketing. And again, although I don't make buy or sell recommendations, because there is, in my opinion, a clear conflict of interest when you take money from the company and then you tell people to buy the stock, many out there will do that. So be aware of that inherent bias. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you, anytime you're watching whatever it's online that it's got to do with public companies, just approach it as if it's marketing. Imagine you're watching a movie on TV and an advertisement comes on, and that's the same thing. Unfortunately, as I will keep saying, I'm not a magician. The guests here are not psychics, and some of the CEOs are even just normal people. Can you imagine? So we don't possess any superior knowledge about what's going to go up and what's going to go down. We don't even know if some of these things are going to go in circles. So no guarantees are going to be made here besides one. And that only one will be that there will be forward-looking statements in these conversations. There will be hopes for the future. And those are conversations that are general and impersonal in nature. And a lot of the things that we'll talk about may or may not take place depending on many different factors, both within and outside of the company's control. I need you to be aware of that. Be aware of the inherent risks to investing and the increased risk of investing in non-revenue generating companies that operate in the harsh reality of the mining and exploration industry. And please talk to someone who knows what they're doing. Talk to someone who has proven to know what they're doing or can prove to you with a piece of paper, like a professional investment advisor. As well as just do more research, use your own brain, wear your big boy panties, take your own responsibility. Go to setterplus.ca, where you're going to find the company's official filings. That's going to be the MD&A, that's a management discussion and analysis, the financial statements, the management information circular, and whenever available, the NI 43-101 technical documents. Just start by reading those. Read them as if you're reading a newspaper. You don't have to understand every dot of them, because, again, you're going to talk to a professional investment advisor before putting your money to risk, but at least it's going to help you get a better understanding of the company and some of the things that some of these marketing campaigns may be missing. So if you don't want to lose your money, if you don't like doing that, go to setterplus.ca, read all these documents. There are disclaimers on your screen right now, and if you don't enjoy losing money, you should also read those as well. With all that said, that's going to be enough because Mark is here waiting for me, and I will kick off this portion of energy transition talks, this portion of the CEO barbecue, by going to a place that I don't visit all that often. I don't think anybody really visits that place all that often because that's Manitoba. And it is specifically the Flin Flon Snow Lake District. So not only the Flin Flon, it's the Flin Flon Snow Lake District, which is in central western Manitoba. But I'm not here to sightsee any swamps. So apparently there's not that many swamps here. But I'm here to look for VMS deposits. And luckily, I'm not alone, as I'll be getting some help from, as I said, Mark Saxon, the president and CEO of T2 Metals. The company is listed as 2, that will be TWO on the TSX Ventures Exchange in Canada, where an average of about 7,000 shares trade each day with a 52-week high of 45 cents and a 52-week low of 11 cents. With a market cap of about $12 million and just over 40 million shares outstanding today, this is a 30-cent stock. There are about 10 million warrants after the recent financing and about 1 million options, leaving the number of fully diluted shares at just over 51 million. Insiders are, however, a significant holder of the shares, owning a total of about 30%. And with this recent financing, there's also a significant institutional ownership, as about half of that financing was taken by about 4 institutions, some of which famous names, even from Australia. The last financial statement, which is dated January 31st, first of all, means that we're due another one relatively soon here. But this one also does not incorporate the recent $3 million financing that I was just telling you about. And so on January 31st, the company had $550,000 in current assets, $480,000 of which, again, at the time was in cash with some tax receivables, as well as a small portion of our prepaid expense on there as well. No long-term debt, of course, was recorded, and the current liabilities were noted at about $480,000, all of which in the form of account payables and accrued liabilities, with most of that, so about $330,000 of that being due to the CEO and CFO of the company, so related party transactions. In terms of corporate expenses, the same financial statement shows me that T2 spent an average of $40,000 per month over the last reported 9 months, or the 9 months that ended on January 31st, and what I would call, again, administrative expenses, where director and office compensations where the majority of that spent, well, not the majority, the biggest chunk of that spent, they represented about 35% of that cost. 20% was into professional fees and 15% went into corporate development, with various smaller amounts of stuff like travel, accounting, regulatory, office rent, and so on and so forth. There's, again, only the administration spent that I'm talking about here. But there is, of course, an exploration expense, and it's actually exploration and acquisition expense that can be found under Note 4 in the financial statements, where I calculated an average of $91,000 per month on average being spent on exploration, mostly on the Sheridan project in Manitoba, which I'll talk about here in a minute. But overall, almost 60% of that total spend that was on the exploration side of things went into actual drilling. There was about 17%. So 1/7 that went into geological work, with various other smaller amounts going into assays, camp, community engagement, and so on. So in summary, about 40,000 a month on average went into administration, about 90,000 into exploration, giving us a very roughly calculated 70-30 split in favor of exploration. And of course, as always, please understand that this financial statement is nothing more than a snapshot in time. In this case, it is specifically at the end of January of this year. So it is, again, we're due another one, and it simply shows you what the finances look like on that exact date, nothing more. Finances, of course, especially within revenue generating and non-revenue generating companies, I mean, are a fluid thing, and I could, of course, be making mistakes in my reading of them as well. So by the time you're watching this, please head over to the company's website as well as setterplus.ca to look at all the numbers yourself and make sure you're getting the full picture. Now, for T2, that full picture is partly to be seen in Canada, but there's also a U.S. component to it as well. It is actually what the company first was based on when they first started. So I'll actually start there, although briefly, and then I'll move on to their flagship asset, which again is in Manitoba. So in the U.S., there's Nevada, there's Arizona. In Arizona, T2 has the Cora copper project, which they own 100% of. They acquired it through staking in 2021. Not a huge project, only about 4 square kilometers. It is 46 BLM load claims, and it's situated on Arizona's southern copper belt. It's being looked at. Exploration here dates back to the 1950s, where intercepts of over 225 meters came back with about 0.3% copper. Although, again, those are just historical grades, not yet followed up on by the company. What T2's done here to date was in 2022, they identified a 1.5 by 1.5 kilometer mag low beneath a shallow cover, thus creating their main target on the asset, which they hope to drill eventually, and permits are hopefully underway. So maybe we'll get an update on that later on, although that's not going to be the focus of the conversation. And then over in Nevada, there's 2 things to talk about. There's the Lita copper project. T2 owns 100% of it. Similarly to Cora, this was acquired in 2021 through staking and expanded in 2022 with some additional staking. This is on the Walker Lane mineral belt, also not a huge project, although in the right neighborhood. So it's about 5 square kilometers. But historical surface work here has shown widespread copper oxide mineralization, with surface samples reaching up to 26% copper. And that's not a typo. I double checked that with significant silver credits as well. Although, again, this is surface sampling. An IP survey was also done in 2022, showed 3 high chargeability anomalies, and they haven't been drill tested yet. But potentially in the future. Again, maybe an update on that later on. There's another project in Nevada, also a 100% owned project. It's called Copper Eagle, also acquired through staking, but this is a relatively new project. The company got their hands on this one in December of last year, so December of 2023. And a field visit to the project earlier this year in the spring resulted in 5 samples with really a wide variety in terms of grades, but they aren't necessarily representative of what's underground because they're grab samples. But they do show that there is some copper and some silver in the region, at least at surface here, so warranting potentially further exploration. This is about 20 kilometers southeast from Carson City in Nevada. And so, again, also on the same Walker Lane mineral belt as the other project that I told you about. It's also being looked at. Exploration dates back a long time, though. It's at least 50 years that no one's worked on the project, with, again, significant copper and gold values obtained from that. So for sampling, suggesting that maybe it's time to look at it again. No geophysics to talk about here yet, as, again, it is a new project, but hopefully something that we also can get a brief update on later on. Not before I've gotten an update on the flagship asset, though, which, as I alluded earlier, is in Canada, in Manitoba. This is a slightly larger package of 50 square kilometers, where T2 has an option to earn in up to 90% of this property through a series of exploration expenditures that require them to spend $1 million in exploration by the 4th anniversary, which will earn them 80% ownership, and then spend another $1 million by the 7th anniversary of the contract to gain that additional 10%. That will lead them to a 90% ownership again. That remaining 10% can also be turned into a 1.5% NSR if the project was to move forward to a mining scenario. That NSR can be bought back for $2 million as well. So all in all, if T2 wanted to have 100% ownership, they can, and it will cost them $2 million in exploration expenditures, and then later down the road, $2 million to buy back that NSR. Sheridan is about 65 kilometers northeast of a very famous district. Flin Flon is called. It's a historically producing VMS, or a VHMS, I suppose, district. And a 2010 resource estimate showed a 6.5 million tons of indicated copper and zinc, with grades respectively showing 0.85% and 1.22%, as well as almost 16 million tons of inferred copper and zinc, and again, respectively, 0.7% and 0.84%. This is, again, where T2 was spending a good deal of its money on most recently, and specifically on drilling, with highlight intercepts from their own drill program coming back at up to 23.5 meters of 1.2% copper, 1.5% zinc, and up to 6.8 grams per ton of gold. And that's not a typo either. So again, 1.2% copper, 1.5% zinc, almost 7 grams of gold. That drilling and these results is what the company used to then compile a 3D geological model, and that's what this year's drilling will be based on, with the drill contract already having been signed about a month ago for at least 3,500 meters of core drilling spread across about 20 holes, and representing the largest drill program on the project over the last decade or so. And that's also what the focus of this conversation is going to be. But before we get into any of that, or before we talk about all that, Mark, this is your first time on the CEO barbecue, so it's annoying questions time. With a fan favorite being, who are you, and why should I trust you with my money?
Sure. Thank you, Antonio. I really appreciate the introduction. You've done your homework on that one. So that was a great sort of preamble on the company. Mark Saxon, I'm an Australian geologist, obviously, and hard to hide our accents. So currently sitting in Vancouver, as you can see behind us here, in the office of T2 Metals and a few other companies. So I started my career, I graduated from Melbourne University a little over 30 years ago, a little hard to believe now, but we're very fortunate that at that time, Australia had a very strong and diverse mining industry with a lot of mid-tier and larger players. And so I came out of university and was employed immediately by one of those companies, which was a company called Pasminco. And at the time, it was the world's largest zinc producer, sort of a sister company in Canada to Caminco. And had a very good first 10 years of exploration experience with that company. And the beauty of sort of starting a career in a larger company like that is great mentoring, great networks. They put you around all different projects and mine sites and exploration and meet really good people. So I was very fortunate with that part of my career, that mentoring. And then yeah, I guess 1999, that company took over another company and it gave me the opportunity to move from Australia to South America. And so I was transferred to the office in Peru and had about 5 really good years, living and working in Peru on lots of interesting projects. And during that 5 years, unfortunately, Pasminco went into receivership. So my employer went into receivership, and so myself and the guy who became my business partner, Michael Hudson, were kind of cast alone in a foreign land, and we had to work ourselves out. And so we transitioned from working for a major company to doing our own thing in junior markets. And so Mike and I teamed up and we started looking at how to build companies and how to sort of initiate our own businesses. And we were very good on the project side, but we had little experience on the corporate side. And because we were living in South America, I guess our focus, we had a much stronger network of Canadians and Americans. And that pushed us sort of northwards into the TSX. And so we started listing companies on the TSX. And then managed to sort of work out how to find good projects, how to build good companies, how to get good shareholders. And we've been doing that for more than 20 years. And so a particular shout out. I'm sitting in the office here of Nick Demare, who's our CFO. So we met Nick sort of 20-something years ago, who still a great friend and supporter. A guy out of Australia, David Henstridge, who had a lot of experience in Peru and still a great supporter. So Mike and I, our first company was one called Mawson Resources, now called Mawson Gold. MAW on the venture exchange. Mawson has made very good discoveries in Finland itself, but through that company also a sub company or a partially owned company, Southern Cross Gold in Australia, has done extremely well with a major discovery. So that was certainly a flagship. I was CEO of a company called Tasman Metals, and in Tasman we made a great discovery in Sweden, a very large rare earth discovery that I'm sure will be a mine one day, now in Swedish management hands. We've got, so Mike and I together in Peru, we made a significant discovery and have a royalty on a major project there that, again, I think it'll be a mine one day. So we've been pretty active and done lots of sort of junior and senior company stuff. I guess from my, and again, personally, my role as a CEO for a rare earth company. And so Tasman Metals went from 20 cents to $6 with a major discovery and made people lots of money. And so I've got a good following and good experience in the rare earth space because of that. And that was sort of really where I cut my teeth in sort of critical metals and small markets and battery materials. And so I guess I was very well placed for this sort of move into energy transition materials, where people are interested in lithium and graphite and rare earths, but also the big one, of course, is copper. And when you talk about any kind of battery metals and transition metals, then yeah, copper is the big one. And so yeah, with T2, we've kind of moved back into copper, and it's a great place to be. So.
How do you have a 30% ownership here in this company? Not you, but insiders. How much of that is you personally?
So I'm just under 10%, and yeah, so in the last financing, I was close to keeping my percentage there. So I put in 150,000 in the last financing, and yeah, so diluted slightly. Yeah, a few options and warrants obviously on top of that, but yeah, close to 10%. So yeah, significant shareholder.
What's your average cost of capital? What do you think?
I've bought a lot in the market. Yeah, I'd be guessing it's around 20 cents, something like that.
Okay. What I'm trying to figure out here, Mark, is how important is this company to you from an investment perspective? As in, how aligned would we be? So I can appreciate that this is not like half a penny founder shares, so 20 cents is decent. What percentage of your net worth would you guess is tied up into this one, though?
Okay, that's a tough one. Yeah, let's call it very significant, and certainly, yeah, the focus in T2 for me personally, and yeah, financially and professionally are, I guess, are separate things. And yeah, professionally, I'm very motivated by discovery. We've got a great team of people. We're working in an area where we're very important to the local people. That's all really motivating in terms of personally and professionally. Yeah, financially, yeah, we're a successful group. We've had, yeah, we've made money in a range of companies. And so, yeah, it's a substantial part of my holding, but yeah, we've done well.
What's substantial? Is it a double digit thing? Is it
double digit?
half
Oh, sure,
like,
double digits. Yeah,
okay, good. Yeah. Good. Well, good, because substantial. I mean, it's just a substantial. Objectively, it is an absolute term. It's a substantial amount of money to anyone.
Yeah, no,
I
I
think.
appreciate the question, and yeah, and understand the question. But yeah, we've had yeah, some good discoveries, and I suppose good discoveries allows us to reinvest and continue with companies like T2, and yeah, it's a great pleasure to be able to write a check of $150,000 into a financing. And yeah, and you made the comment in the intro that yeah, any debt or liabilities that sit on the books to myself and to the CFO, and yeah, we've managed to work without taking a salary. Yeah, it's accrued, but we don't need to take cash out of the company, and so we're able to protect sort of shareholder interests and make sure we are successful by delaying those payments. So yeah, and that's through good fortune and good discoveries.
Good for you. Congratulations on that. I can also see you've been buying in the market, so that always helps as well. Are there any other incentives, like competing interests that you own with this company, like a royalty that you own in a project, or a service company that is currently servicing this one, something else among those lines?
No cross ownerships, nothing like that at all. It's a very clean company, and yeah, when it was rolled back and yeah, restructured, yeah, we kept it as a very tight company, and sort of got, yeah, good people, friends and family first of all, investors, and you saw in that last financing we bought in some high quality money, and those questions arise when you do that that kind of financing with skilled investors. The same questions arise. So yeah, no cross interests in any part of the country.
Right. And for you personally, is this your only gig? Are you involved publicly or privately with any other businesses?
Yes, I'm on the board of one other Canadian company, which is essentially a shell, not doing any business at the moment, and two fairly small ASX companies.
Okay, so this is still like 80% of your time, or like the majority of your
most
time?
Certainly, yes. Yeah, and the two ASX companies are both in rare earth metals, which sort of kicks to my background of being involved in rare earths, and yeah, so it's quite a different focus. There's no technical overlap or no competing interest there.
Yeah. Rare earths are definitely doing interesting stuff with whatever China might be doing with gallium and germanium. Anyways, I just recently read something about it, so it's a person of interest of mine as well. So we might as well do a podcast on that separately.
Yeah, absolutely. And rare earths are a very interesting field, and yeah, I remain passionate about it, but not for the faint-hearted. It's yeah, the layers of complexity in rare earths exceed every other part of the mining industry.
Yeah. Well, Mark, this is where I typically go into kind of figuring out what the main unanswered question is for the company. We go and talk about the specifics. But what interests me more in your case is why you think you're the chosen one, if you will, meaning with your flagship asset, Sheridan, it's in a very famous VMS region, as I mentioned, Flin Flon. It has been looked at before, and it has been worked on before your time. So I suppose a twofold question here would be, if it's as good as you hope it to be, why did no one beat you to it? And what are you doing differently to deliver on what previous operators might have missed or failed to deliver on?
Yeah, and I guess there's multi layers to that question about being a chosen one or the chosen one, and we're sitting at a time in the market where markets are still fairly tough, and so everyone's kind of feeling a bit beaten up, and so why are we a company that be a 10 or a 20 bagger from coming out of these tough markets? So we've got mixed assets as you discussed in the intro, but we're really focused on this asset in Manitoba, and Manitoba, and as you said, you haven't been there, and not many Canadians have been there. It's that sort of central part of Canada that people tend to fly over from Vancouver to Toronto. So Manitoba, let's sort of tick through the list, I suppose, in why it's a key asset for us, and I think a key asset for investors. So Manitoba is a great mining province, and I suppose everyone says that about where they're working, but the demonstration for us with that one is in the last 18 months, we've been given 520,000 from the Manitoba government to sort of incentivize our exploration. So the Manitoba government, through a system called the Manitoba Mineral Development Fund, has given us about 1/3 of our exploration spend has been covered by the MMDF. So I think that's the best way to sort of tick the box to say that the government is very supportive. I guess the second thing is, we're in a really great region that's got a long history of mining, major projects, big discoveries, multi-metal. So you mentioned that sort of Flin Flon area, but really it's much bigger than just Flin Flon. So it's sort of a big east-west belt from the Snow Lake camp. So a gold and copper district being mined by Hudbay. We've got Flin Flon in the middle, and then on the western side, across in Saskatchewan, we've got sort of the McIlvenna Bay district, which is being explored and probably mined by Flin Flon, by Foran, sorry. So it's a big belt with more than 100 VHMS deposits. And I listened to one of your recent sort of VMS sort of conversations, which sort of touched on many of the issues. And so within these VMS belts, and I think your comment was pimples on a face or something that was a little memorable, but you get clusters of deposits. And so the Flin Flon area is one of those areas where you've got lots and lots of these deposit clusters, and that really sort of kicks back to how these deposits formed. So for us in Sheridan is one of the belts within one of the sort of sub-districts or camps, I suppose they call them in Canada. So one of the camps within the Flin Flon belt. So it's got about let's say about 10 known massive sulfide occurrences or deposits. And and just before I dig in, whenever I use the word deposit here, and we're talking about some of the past mine deposits, the resources at Sheridan that we quote are historical resources. They're not current resources. So they're not part of a current 43-101. So we're drawing on a 43-101 report from 2010. So we haven't done the work and the confirmation to say that those resources will transfer into current resources. So always that disclaimer. So looking at Sheridan, it's got a mining history, and it's also got a discovery of other deposits and occurrences in that region. So the mining history is quite substantial. So it was about 7.5 million tons at 2.5% copper and 2.5% zinc, a bit of gold and a bit of silver as well. And those kind of metal ratios, pretty common, I suppose, globally for VHMS deposits. You can get more zinc rich, you can get more copper rich end members, some are lead rich, but and some can be very gold rich. But that's kind of typical for this region is 2% copper, 2-3% zinc, something like that. So the mining history was 7.5 million tons. So that was done sort of 1930s up until the 1950s. The project was mined in a hurry. It was the ore was extracted as quickly as it could to get back into Flin Flon and processed there. And so yeah, we know there's deposits that are of significant scale, high grade, that would be very economic today, and that was starting from surface. So when we look at the geology of the region, and we're talking about very old rocks, 1.9 billion years old. The rocks have been folded and faulted and moved around a lot over that time, which means the geology at surface is quite complex. And you look at the surface map of the Sheridan region, and it's what we would call, it looks like a doubly plunging syncline, but in fact, it's a little bit more complex than that when you look in detail. So the rocks are quite complex, and that's how things get hidden. So if you've got very simple geology, then okay, you can sort of step in and make good decisions straight away. Sheridan is not that. It's quite complex, which means there's been lots of discoveries in lots of different areas on the project. And so we've got 4 areas that have got historical resources from past drilling. And then, yeah, other occurrences of massive sulfide in the area that haven't been followed up appropriately. So we've got lots and lots of places there that we can do additional exploration and be, yeah, with a very good probability of further discoveries.
Well, so lots to touch upon there. What I'm thinking about is how did no one do that before? Like, are there any accessibility or topography or caribou or First Nation issues or something that's made simple physical access to the land package difficult over these years?
It's got a complex history in terms of its ownership, and we can go through that in a minute. But it's very landscape wise, it's very typical of northern Canada. It's lakes and forests and a bit of swamp, not too swampy. So I suppose some of the real advantages of the location, and again, it'll come back to the question, I suppose, is that it's got a small village on site. So mainly, so the village is called Sheridan, which is used as a bit of a fishing village and a bit of sort of halfway point. It's got a railway line running through it. It's got all year round road access to the project. It's got power, it's got access to fuel, it's got some support there. So when we work there, we're drawing on local people as much as we can, particularly the First Nations community, and so it's a really sort of easy place to work. So I guess in answer, so I've just said it's easy, but in answer to why others have or haven't made discoveries there. So when it was mined in the and finished in the 1950s, there was a bit of a legacy that was left behind, or a significant legacy in terms of the tailings dam. So it was mined in a hurry during sort of war and post-war times, Second World War, and mined by a company called Sherritt Gordon. And the company was producing copper for war efforts for Canada and the US. The idea was we're going to come back and clean up the tailings dam when we're finished mining. They never did, and so that liability shifted to the Manitoba government, the provincial government, and so it was a site where there was quite a long legacy to get that problem fixed, and so it had a bit of a sentiment that nobody could go back to Sheridan until that was resolved. So that's now been resolved. The tailings have been cleaned up. That was all done at provincial government cost. You look today, and it's not perfect, but it's certainly much better than it was. And there's now a sort of a restoration effort to get sort of forest planted and things back where the tailings dam was. The project had been owned by Hudbay for a long time. In the mid-2000s, a company called Halo Resources joint ventured into the project, and were doing sort of very significant work. They drilled some 140 drill holes. They identified and calculated the historic resources that I quoted there before. And were progressing well up until about 2011, and were well financed. But I suppose when you look at the Hudbay work and you look at also the Halo work, because there's a train line that runs through the project, explorers were entirely motivated about finding something that could be mined quickly from an open pit to put onto that train line to come back into Flin Flon. And very sensible business model. There was no complaints about that. It was the logic of the day, and makes very good sense. And so when you look at the resources that have the historic resources, most of them are open pittable. There hasn't been any deep drilling sort of below those pits to sort of really test what was there. So there's an opportunity there. But I guess the more interesting part of the story was that the project proceeded through until 2011, at which point Hudbay exercised a clawback right to take part of the project back so that they could put it into development themselves. So they took the project back from Halo Resources and started to spend money. So Halo Resources had raised money on the project, had a good cash box, but essentially lost the key part of their key asset back to Hudbay. And so Halo Resources went off and did other exploration in other places. And in fact, they merged with a company doing exploration in Chile. And so Hudbay did a fair bit of work on the project. We jump ahead a few years, and metal prices are low. 2013, nobody was interested in mining again, and it was a few tough years. So Hudbay ended the clawback and gave the project essentially back, withdrew from the clawback and gave the project back to Halo Resources. But Halo didn't exist. It wasn't really a company. It didn't have people. It didn't have anyone in Manitoba. And so the project sort of just sat in this then unlisted private company that was owned by a company that had gone bankrupt on the TSX. And so it really just sort of slipped through the cracks. There was no ownership or no person involved with the company. And so when we identified that, and so during COVID, I was looking for projects and ideas, and noticed this area in Manitoba that had historic resources, but didn't have any kind of recent work. And so that's what caught my eye. Literally clicked on the maps of the Manitoba government and saw, Halo Resources. Okay, they still own it. Who are they? Could we speak to them? And found that Halo was a company that was in default. And so we supported the company to be able to come back to do the deal. So we had to advertise in legal notices for 21 days and to see if there was any debtors, and no one came up. And so we were able to get Halo to be able to stand back up again and to do a deal. And I suppose the beauty of what happened in Manitoba was that because Halo and Hudbay had filed all of their expenditure to the government, the claims were in good standing until 2028. And so even if we didn't spend another dollar on it, the claims remained in good standing until 2028 because of the past expenditure on those claims. So that was the opportunity that we saw, and so we did a very cheap deal on that basis, and landed a project that had historic resources, major past mining, relatively easy access, and lots of potential to go on with. So that was a long answer to a short question, perhaps, I'm afraid. But,
I appreciate that. It's a very detailed background, something that you typically don't get, or it's just hard to find as retail. You have to follow all the breadcrumbs for hours and hours until you can find these things. So I can appreciate you just laying it out like that here. You do have spending commitments to get your hands on that project, as I mentioned, about $2 million in total to get to 90%, $1 million to get to 80%. So let's talk about Sheridan more in depth and how you plan to unlock its potential value here. You want to do at least 3,500 meters of drilling this year. It's spread across 20 holes, as I mentioned. What's the main goal? What's the main unanswered question that these 20 holes will answer for you that the previous drilling didn't?
Yeah, absolutely. And we're well on the way to that earning of 90%. So we'll achieve that quite comfortably quite soon. And so we'll be 90% owners late this year or early next year, I believe. And I just want to touch again a little on geology before I jump into some of those questions. But so I mentioned that the past drilling has been all quite shallow. So the rocks are 1.9 billion years old. They originally I think with these VHMS deposits, they originally formed on the seafloor, so kind of flat. So if you looked at one today, you'd have sort of vertical zonation. Where you go sort of from the massive sulfide perhaps into a stringer zone. But after 1.9 billion years, with a whole lot of structural overprinting and change, now everything is folded around, and so there's no ups, there's no downs. If you head to Nevada and you look at a porphyry or an epithermal project, the epithermal project is still sort of sitting in position, so it's got a top and a bottom. For us working in Sheridan for the whole Flin Flon camp, there is no top or bottom. Everything has been moved around so much that a horizontal geometry has exactly the same exploration potential as a vertical geometry. There is no difference. So there is no up and down. We know that we've got projects here with, say, 3 kilometers of continuous mineralization horizontally that's been drilled down to, say, 150 meters. There is absolutely no reason why we can't tip that vertically and say, okay, we've got 3 kilometers of exploration potential down dip. So we've produced long sections of our projects, and we publish some of those, and it's really hard to do because you've got a 3 kilometer long cross section, and that's 150 meters high, with all of this blank white space underneath. So all that blank white space is the potential on the project, and yeah, maybe it's not a flat surface, it's folded and deformed, and that's where all the potential is, that sort of down dip, down plunge, deeper parts of the project. Okay. So we've got a 3,500, 4,000 meter program planned, and that's starting very soon. We're just finalizing some of the logistics there. It's nowhere near enough. I could consume 10 times that much drilling, and so we see many targets and opportunities. Some of it's in past geophysics, and some of it is in sort of conceptual targets and structural targets. In this program, where we're going back to test that gold-rich area that you mentioned in your intro there, we're coming back into that area because that was a real surprise. We're looking at one of the historic resources that's got that was only drilled to a fairly shallow depth, and it's got some great downhole, some great conductors sort of down plunge, so going to that side. And then we're looking at some other sort of step out targets that are in particular structural zones, and looking for good geology with good geophysics sort of in the same area, in places where we can drill a little bit deeper and test some new targets as well. Okay.
What is the, and I want to talk about some of these things because you say you want to go a little bit deeper. 3,500 meters, 20 holes. That's what an average of 175-ish. So 150 to 200 meters depth on these holes is what you're looking at. You do eventually want to go deeper, though. How deep do you think this thing extends?
Yeah, we can talk many hundreds of meters to a kilometer. And I suppose if we look across at, say, what in Saskatchewan, and I guess the model that we're using, or the template is what Foran has done across at McIlvenna Bay, and T2 Metals has a market cap of 12 million, and Foran has a market cap of 1 billion, and based on great discovery success and where they are sort of on that development path. But the way what happened at Foran with McIlvenna Bay was a very similar project to what we're dealing with at Sheridan, that had lots of surface mineralization, and had high grade near surface mining, and the question was what's at depth. So their exploration model, and exactly the same, that they've got a big alteration package, so they know big fluid flow and very strong mineralizing history. We've got the same thing at Sheridan, that same big alteration package. So Foran came in and they drilled deep holes, so maybe 600 or 700 meter holes, and then they did downhole EM, and so the downhole EM is seeing 200, 250 meters off the hole in all directions to say if there is a massive sulfide, the EM should see it. And so you start with a little hole that's a couple of inches across. The downhole EM gives you sort of a 200 meters by 200 meter circle around the hole, so 400 or 500 meters width. It's looking through all of that area around the drill hole. And so then your first hole is let's say poorly targeted, or it's kind of a stratigraphic hole that sort of gets through the system. Your follow-up holes, when you've then got the EM target, that's where you really identify the opportunities, and you've got to be then committed to those other targets and drill the off-hole anomalies. And so that's exactly what Foran did, and that's how they've made all their deep discoveries. So that's in our future at Sheridan, and when we have the confidence in the geology, and we've done this reasonably shallow program, coming back in and doing 10 holes, each of them 600 meters long, is a great exploration strategy as well. And the project does need that.
Is part of this drilling going to be focused on figuring out what's going on with the graphite that's previously showed up? Because typically with VMSs, graphite is not the primary economic mineral, of course, but you do have some of that. What's your reading and understanding of the presence of the graphite now?
We have an annoying amount of graphite. rather than an economic amount of graphite. So yeah, graphite behaves like a metal when it's in electrical geophysics. And so it produces anomalies. And so when we look at our targets, the strongest anomalies will be from the graphite because it's very conductive. So we don't drill the strongest anomalies in the geophysics. We drill the second order ones, which are more likely to be the massive sulfide. So yeah, we'd have percent grades of graphite. Yeah, it's not insignificant. But yeah, I'd call it annoying rather than it's a negative, not a positive in terms of exploration strategies. So yeah, we've owned a graphite mine in Sweden in the past as a group, and yeah, I'm not out there drilling holes for graphite, that's for sure.
Is it gonna complicate your metallurgy, or do you expect it to be? Because you say it's an annoying amount.
Yeah.
So what? Not yet a credit, so not necessarily an economic byproduct yet.
No.
And no chance for it to become one.
Based on my knowledge so far, no. Yeah, it's not a grade where you would recover it. So metallurgically, the graphite sits separate from the massive sulfide. So yeah, on a mining scale, yeah, not an issue. On an exploration scale, yeah, yes, the signal from the graphite does confuse the signal with the massive sulfide. So it's a place where massive sulfides can hide, I suppose, in geophysics because of the influence of the graphite.
So how do you deal with that? What do you do? More geophysics or something else?
Yeah. So the graphite sits in a certain part of the stratigraphy. And so we can sort of, as long as our geological control is good enough, we can say, all right, that anomaly relates to graphite. This one, we don't know. So there'll be ones that we know relate to massive sulfide. There'll be ones that we know relate to graphite. And sitting in between will be a set that we don't know. And so, yeah, they're the ones that we need to be cautious with and either follow up or if we don't follow up, find a reason not to, I suppose.
Isn't there something else that you can do, like downhole EM or geochem or something else?
Yeah, sure, yeah. And once we drill the hole, we have a definitive answer. So, yeah, if it's just geophysics and it's just sort of that remote technique, it's not. So you're just relying on geophysics. Yeah, you can have an answer that it's a little opaque, that you're not quite sure which it could be. If you've got control on the geology and you know perfectly where everything is, then yeah, you can deal with that. But but once you drill the hole, you answer the question almost once.
Yeah. Well, preferably you answer it before that, so you don't have to drill the hole. What is
And Canada and Australia, many holes have been drilled thinking you were going to find copper, and you found low grade graphite. So that's a common problem, and because the graphite anomaly looks like it could be a sulfide or a metal anomaly in geophysics.
I think we're
getting better at resolving those things, and as an industry, we're getting much better at resolving those things.
I think the graphite knows we're talking about it because I broke my pencil. Yeah. But what is that gonna? Well, okay, you drill the hole. What's that gonna cost you? What is that costing? What's a 100-meter hole costing you?
Yeah, so our drilling cost, our all-in drilling cost in Manitoba, it's pretty economical. So we're drilling at about depending on access, between 200 and 300 Canadian dollars per meter typically. So it's quite an economical place to work on a global scale.
Okay. What's the timeline for this drilling? When do you start? When is it done? When do we get the assays?
Yep, very soon. So we're working, and I guess and before we kick on and answer that question in detail, I just want to touch for a moment on the other sort of I suppose important milestone that we made in that region, and that was particularly with the First Nations community. And Sheridan has a large First Nations community, and so the local group that we deal with, the Kisiwapa Cree Nation. Our relationship with them has been a real milestone for us, and we've managed to make good friends, make a good exploration agreement with the Kisiwapa Cree First Nation. So we're very focused on working with them, with their timelines, employing people where we can. And so we're going through that process now, making sure their skills are appropriate to support us in this next drilling program. So we signed an exploration agreement sort of in the second half of last year, before we did our first drilling program, that that guarantees training, guarantees sort of support. We provide some direct funding for community needs in that Sheridan community, and so I just don't want to sort of be dismissive of the importance that the local First Nations community is in supporting our project. So we've now got we've got ourselves set up there. There's a local fishing village. We've got people now on site there, sort of banging pegs for drill holes and getting ourselves ready. So drilling will be starting very soon, imminently. I've just been on the project and just doing the walk around and discussing the targets. An imminent start, and so we'll be drilling now for probably the next 2 to 3 months. We will have some winter drill holes as well, which we will do sort of January, February. Areas where it's a bit swampy, areas where there's lakes, and we can minimize our environmental impact by doing winter drilling when snow's on the ground instead of summer drilling. And it doesn't add much cost when you've got good ground access. We're not needing helicopters. And so that sort of spreads out the work as well for that local community, which is appreciated. And we're spending as much as we can with that local community. Using local people to support us on the ground rather than using helicopters that are paid for offsite and elsewhere.
So timeline wise, what does that mean for you?
To think of the timeline, then we're at the end of August now. So let's say we'll be having the first core in the trays or core cut and to the labs in the first few weeks of September. We've got labs have got much better. Their turnarounds have got much faster than they were this time last year. So about a month turnaround on assays. So that sort of pushes us into the first half of October.
Right. Okay. First week of October. Well, I hope the market is paying attention to it again. It feels like it's a little slow right now anyways. With the additional that you said that it adds a little bit of cost to it, what are you budgeting for this drill program? Because you also in the news release, you say at least 3,500 meters.
Yep.
Meaning it can be more. So what are you budgeting for the total program?
Yeah, so we raised, as we said early on, we raised around $3 million recently. In addition, we were given $300,000 from the Manitoba government. So we've got sort of plus $3 million in the company at the moment. So the budget for that exploration program was a little over $1 million. Let's say let's round up to 1.2, 1.3 for that drilling, and that sort of answers the first set of questions. We've got money in the bank. We can come back and continue with further work. If we get a good hole, we'll be in an area that we weren't expecting it, or something that needs immediate follow up. Then we change the exploration plan immediately, and we will do immediate follow up. And that's where it's called a minimum rather than sort of a maximum number of meters. That anything that needs follow up, we've got the meters in hand and the money in hand to be able to follow up immediately.
Where I'm going from with those questions is basically wondering, is that the money that you have right now, is it going to be enough for you to update the 2010 resource? Or are you going to have to go back to the market before you could come up with your own resource?
Mm-hmm. It won't update that resource. No, we won't, and that's not a focus for us at the moment. And the resources we understand them quite well, and the historical resources. All my disclaimers again, but we're confident that we know what's in those locations. I guess the real thing that we're after is that step change in discovery. So we're after a much bigger discovery, a much bigger target. We're after 20 million tons at 3% copper. And so we're stepping away from those resources. Rather than sort of just validating the resources, we're stepping away from them and looking for those bigger targets, those bigger systems. And so that's really what we want to focus on. So yes, those near surface targets exist, and all the near surface historical resources exist. If we came back with a strategy to say we're going to have a small, medium-sized mining operation, and we could have 20 million tons at 1% near surface. That's in the resources, the historical resources that have been identified already. Okay, that's valid. But we're looking for something that's the step change. That's a bigger target than that, and higher grades. And Sheridan has produced those high grades in the past. The Flin Flon region produces it. Our new drill holes with the high grade gold shows that you can go shit, there's things here that no one's seen before, and we're really surprised to discover this stuff. So yeah, that's what VHMS deposits give you is, they're complex deposits. They change in all directions. You get positives and you get negative surprises in every single drill hole. So that's what we're going through.
Well, the work you did on the project last year also came back with much higher grades, noticeably high grades overall, actually, not only higher than what was previously coming out of there, but so much higher than what the previous operator got out there. And how representative would you guess they really are? Because you're talking to me about the 3% copper and stuff like that, but how representative are they for where the resource might be headed over the long run? What average grades would you expect for the resource?
Yeah, so yeah, it's always that trade-off between tons and grade, I suppose. And yeah, I'm sure if you looked at many sort of tons and grade curve, because everything was put into an open pit, there's a degree of dilution. Yeah, so the historic mining was underground. Most of the historic resources from 2010 are in open pits. So open pits, you tend to, the grade will drop and the tons will go up. So yeah, we certainly see that effect. So the drilling that we did was to extend past mineralization, and drilling last year was, let's call it conservative. It was an area that had the best access, and so we didn't have to spend too much money on access development. It was an area where we had pretty good data from past drilling, and we could sort of do step outs. The one that really sort of took us by surprise is that hole that you mentioned in the intro, which was the gold rich hole. And bit of gold had been known from Sheridan in the past, but spotty amounts, and so to get gold over that thickness was really surprising. And in particular, if you look in detail at that intersection, the gold rich portion and the copper rich portion are not the same; they're separate. And so the gold is sitting in the hanging wall to the massive sulfide. So you look at the core and you've got kind of a scruffy grey rock up hole that it's got a bit of veining and some galena in it. And then you've got the massive sulfide. And so the massive sulfide everybody sees. We had a really good geologist on site who'd been working at in the Snow Lake region. And in that uphole portion, he saw a bit of galena and a bit of alteration. And he said, okay, I'm going to sample this part that's uphole as well. And that's where the gold was. And so, it took us by surprise. In fact, I was out riding my bike in Australia, and I got a phone call from the geo when the assays came in, and he said, I've got some news. Usually it's bad news when someone calls you, but this time it was good news, saying we've got these assay results. And so we went back, we did fire assay to make sure that they were real, and screen fire assay to test it properly, and absolutely they were real. And so that's opened up a door to say, because this target, it's not the gold target isn't responding to EM. It's not responding to the geophysics that's been done in the past. That's always the massive sulfide. So we've got a target now that says we don't know why it's there. It's not it's not being highlighted by past geophysics. Maybe it sits next to the massive sulfide consistently, but we just don't know. So it could be a separate target by itself. And when you look down at Snow Lake has gold only deposits and mines where the base metal grades are quite low. So they're known from that region. So we're certainly got our eyes open for that one as well.
Okay, and you're going back to that region this year, though?
Yes, we are. Yeah, absolutely. Yep.
Okay. So what would that mean for your, again, as what I just said, what average grades would you expect? I mean, and how representative would this be for the resource that you would eventually hope to have out?
Sure. Too early to say, I suppose. We could go back and we could recalculate the historical. Yeah, we can use the same set of data and we can recalculate the historical resources with current metal prices, with and make it a smaller, higher grade deposit. Certainly that can be done. There's lots of multi% copper intersections across the project, and so we can certainly come in and look at higher grade targets, and certainly our motivation is to look for higher grade copper targets. But we kind of haven't done that work yet to say how do we shift from sort of a larger tonnage open pit target into a smaller higher grade copper target. But we know from past drilling and our own drilling that that copper 1%, 2%, 3% copper grades are not uncommon over reasonable widths. So we know it's there anyway. So really when you're looking at a project, yeah, like a VHMS project, one of the key questions is, can the project form economic grades? And so, yeah, and the same with a porphyry target. Like, does a porphyry only do 0.1 or can it get economic grades? With VHMS in the Sheridan district, yes, it has been proven on a mining scale and on drilling and resource scale that yes, it does produce economic grades, which yeah, at least 0.5% up to sort of 3 to 4% in drill core. So we know that the system is strong enough, the system is working, that 1.9 billion year old mineralizing event, yes, it was strong enough to focus enough metal into one region to produce these high grades. And so that ticks a big box. Then the next is about yeah, is there enough of it there to be able to be sort of a mineable ore body at a modern scale?
What part of the program, like, so yeah, when do you go to that zone? And why I'm asking that is because I suppose results are going to be coming in batches.
Yeah.
So what part of the program is going to be focusing on high grade stuff? The first one, the last one?
Yeah, so we'll start at that. We'll start at that location. So
Yeah.
there's yeah, so just thinking roughly about the program, but yeah, we'll drill some holes there early on. Part of it requires winter drilling because it extends under a swamp. So it'll be split between summer and winter programs.
Okay. Why I'm asking is because I'm again thinking about timing here, and the BCSC recently flagged some non-compliance issues or something for this project. Is that going to change your timeline a little bit? Does it do anything? What does that mean?
No, nothing at all. And yeah, we're happy to sort of take a slap on the wrist for that one. And yeah, and you'll note my caution that I'm using historical resources rather than resources in all of my conversations there. And yeah, it relates to sort of some of my use of historical resources versus resources, and in particular, well, too much information for this call, but yeah, there was a very a small use of historical versus current resources that that we need to polish up on, but it makes no difference. It makes no change to anything. So yeah, we'll be publishing a 43-101 report within the next month, and yeah, and that sort of is the end of that issue.
You're also in your relationship with the Kisiwapa Cree Nation is it is in good standing. How long is that? You signed an exploration agreement with them not too long ago. How long is that exploration agreement for?
It's in perpetuity. There's no end date to it. So yeah, the agreement, yeah, so it's focused on providing education and training and maximizing employment, I guess, for the local Kisiwapa community. So yeah, we do that wherever we can, and the drilling company as well. Yeah, a shout out to the drilling company that we work with has also been very good at that skills transfer. So at the moment, yeah, in our program, we've got 3 First Nations people that'll be working, yeah, almost full time between ourselves and the drilling company to provide support. So we provide a percentage of our expenditure on the project. We make a small percentage payment goes into what we call the reserve fund, and the reserve fund is money set aside for social programs or for purchases that are requested by the Kisiwapa community. And so yeah, the example so far, we've bought a small sawmill for the community. So they're now producing timbers, selling those timbers to third parties, and yeah, building up a small business. That's worked really well. We've provided some opportunities with funding to go to education and to community meetings outside Sheridan, and so paying some of those travel costs. And yeah, we're now working towards a program that will be funded by the Manitoba government or federal government, where we can increase the training that's happening on site there, and run a small program where people can be trained as field assistants to support companies like ours, and also offsiders and support drilling companies in the region. And so yeah, we're sort of coming up with some creative ideas to provide yeah, longer term strategies that whether we hope to be successful, but if we're not, we want to leave a really positive legacy in that community. Yeah, when exploration companies move on.
Well, but so you are getting quite a lot of help from the Manitoba government. Well, not quite. Well, maybe not in absolute terms, but it's come up a couple of times already. There's funding that you've received some grants already, as you mentioned, $300,000, I believe.
520 over 18 months. Yeah.
Oh, okay, over 18 months. How does that how does that work? Like, why are you getting all that money, and are you expecting to keep getting more from Manitoba later on?
Yeah, so it's a rolling system. So yeah, the Manitoba Mineral Development Fund is a rolling system that kind of refreshes. So we prepare a budget for a work program. Yeah, let's say it's the drilling program. Yeah, our budget of say $1.2 million for this drilling program, we prepare that in detail. We submit it in a standard format to the Manitoba Mineral Development Fund. And then yeah, if you have a First Nations agreement, you have your permits in place, you're a good corporate citizen, yeah, you're doing good work, then the MMDF will provide up to yeah, no more than a third, up to $300,000 per work program. So we can complete this work program, and yeah, we can overlap work programs, and we can, as long as we've, again, good corporate citizens and good relationship with First Nations, we can go back and reapply for the same money again. So we've got 2 grants so far. One was 220,000 last year, and this one is 300,000.
Okay. And you expect to keep applying for it, or
yeah, absolutely. Yep, the program's been in place for many years. Yeah, it's really good for attracting companies into Manitoba, and yeah, we'll as long as it's there, we'll keep on applying.
But okay, so you have money to finish this drilling, you have money to do more drilling if and when needed. When do you expect to be going back to the market?
Yeah, we're not rushing towards that. I don't have it sort of a mental note sort of tucked away on that one yet. If we get good results, then yeah, we'll give it some consideration if we need to. Yeah, we're obviously not in a panic. We're a fairly low cost company. Yeah, my Methodist upbringing means I'm very cautious on where every dollar goes, and yeah, so we're fairly low costs, but yeah, it'll be subject to getting good results. We are interested, I suppose. The project that we have in Arizona is one that catches the eye of a lot of people and says, when are you getting to Arizona? So yeah, we'd also at some point in the medium term like to have the money to drill that one as well, and yeah, understand the balance between the 2 projects.
It's a good point that you mentioned that you're low cost, because you are, as I mentioned, about 40,000 US a month is what it's Oh, no, Canadian. That's what it's costing you, not even US. Is that where you think that's going to stay? Because I mean, this is on the lower end for public companies as a whole, but now that you're ramping up, or at least doing more drilling this year, is it going to go up, your G&A?
It doesn't need to go up by too much. The office I'm sitting in here in Vancouver is a shared office between a few companies. Yeah, low cost. Nick, our CFO, shared across companies. All of that support network is shared across companies, so that certainly helps. Yeah, so I live in Australia, as you know, and so I'm a little bit remote. Only ever fly economy, or I pay my own tickets if it's not. So yeah, it keeps the cost down. There's no reason for that to spike. Yeah, a bit more marketing. We're certainly looking at telling the story a little bit more aggressively than we have in the past. Yeah, I'm feeling very confident that we've been through some tough markets, and now's the time where we really want to be sort of selling our story hard and good news flow and selling into a rising market. I think it's a great time. So we'll be doing a little bit more marketing than we have in the past. So that'll obviously come through. But yeah, we've got a great network of people. We've got lots of ways of telling our story. We've had lots of successes with other companies. And so when we talk, people do listen, and we can sort of get our message out pretty well. So yeah, it's not going to break the bank.
Right. What are you doing for marketing? Like, what are you hoping to do? And who do you think you're going to be telling the story to? Like, who do you find receptive of these kind of stories in this stage of the market?
Yeah, in this stage, yeah, like everyone's a bit beaten up, I must say, and yeah, so I've been around Canada for the last week or two, and yeah, there's a group that have capitulated, and I suppose the reason for that, we've seen metal prices run up a good bit, particularly gold, and yet equities have not yet lifted as much as you would think they should. So there's a group of people kind of throwing their hands up and burnt by lithium, burnt by other things, and are they coming back in? So we've got to re-inspire them to come back into the market. And I want them to be investors who come back into companies like T2 Metals. So I think, and we emphasized it in that last financing, we bought in some really good names. And so we bought in every shareholder I appreciate. Every shareholder is a smart shareholder, but we brought in smart money into that last investment round, which had, let's call them professional investors. And so we had Earth Labs, very well known here in Canada. We had a smaller mid-sized fund, the URI fund out of Australia, and we had the Lowell fund out of Australia, publicly listed, very successful resources investor. And then we had a group out of Europe called Ormontis, who were backed by very smart money and very good long-term shareholders.
Right.
So using that network really helps us to sort of tell the story to other retail or the next layer of shareholders, because we're dealing complex markets and complex metals and complex geology, and so to know that you've had appropriately skilled and smart investors coming in private placements, that's a great reassurance for that next layer of investors that come in and follow through. So the money that we've raised, we're going to get a lot more active in Europe in terms of our marketing strategies. We've got a good network now through that Ormontis investment. Really appreciate that one. Earth Labs, their networks are very strong and helping us sort of build that strategy. And networks we've used in the past as well in the US to help share that story.
Have those institutions that you brought in on the last financing, and it took about half of your financing there, so significant, all of them are significant shareholders now. Have they indicated desire to keep coming back in on financings? I mean, they must have asked you, again, the same questions that I did so far. So will they be funding you in the future as well?
No one makes you any promises, but nominally, yes. So the Lowell fund, that was their second financing. So they've been in before, so they followed their last one. So generally those shareholders, once they've put the time in to a company to make the decision and get to know the team and the group, then they're committed shareholders. And as you know, most TSX companies, we suffer a bit from liquidity. So those shareholders that come in, they can't get out overnight anyway. So they need to make longer term commitments. So I think the group that came in, are those longer term shareholders who will follow the story. Obviously technical success is part of it, but for us, we've got to do all the right things as a management group and make sure we're making the company something they want to invest in. And so that's the onus is back on us again.
What about using some of the other assets for as financing vehicles, if you will? Can you, and I'm talking about the US assets, of course, here, but is there an option that you can go, for an option agreement, sell them, JV them, do something creative with them that you don't have to do any equity dilution to keep advancing your assets in Manitoba?
Yeah, sure. And that's a potential model. And we're open to it. We've had discussions on some of those assets. I'm a geologist, I'm an explorer. The whole point of the business is to find something. And particularly, I suppose, with the core asset is the one that really everyone comes back to us and says, why haven't you drilled that one yet? And really, I'd love to get some holes into that. The whole purpose of the business is to drill some great holes in a new project. And so, I'm a little bit reticent to divide up the pie too soon with a target like that, because it's a great target. It needs a solid drilling program, and I'd much rather we owned 100% of it when we did that first drilling program than allow anybody else to sort of share the upside. So the point of the business is to be part of a discovery. We're not a project generator. We're not trying to share risk out with many other parties. Where we want to find something that is a 20 bagger for shareholders. Not that progressive growth. So that really is the motivation of the business. So it's about discovery, and that's how we've built these other companies in the past, is to take those high risk, high return projects and spend our money wisely and do really great geology and maximize potential for shareholders.
So you also wouldn't consider a JV for Sheridan either?
No, not at the moment. No. It would need a big payback to our shareholders in the process. And I can't sitting here, I can't see what that deal looks like, but there's no reason for us to think of that strategy anymore.
To go back to the U.S. assets, though, permitting in the U.S. is becoming more and more challenging. How do you mitigate that risk while in the process of potentially delivering those new discoveries, those 20x discoveries that you're talking about?
Yeah, so the US, it's a fair comment that yeah, not all the US, but parts of the US more difficult, challenging, and yeah, post-COVID, it's kind of popped up as being relatively expensive as well. So, and that sort of was part of our inspiration of moving to Canada was we can raise flow through money almost always. The cost of doing business is much cheaper in Canada than it is in the US. And yeah, lots and lots of good projects as well. So yeah, we sort of prioritize the Canadian assets over that. So yes, doing programs in the US has that challenge. For our work in Arizona, obviously Arizona's had a few big successes, but a few projects that haven't progressed to mining perhaps as quickly as they should have. So yeah, we are very mindful of that and balancing our risk between the two countries. And yeah, Nevada's good in terms of permitting. That's sort of pretty quick and easy and well established. Arizona, where we're going through a permitting process now for Cora, and yeah, to get drilling done, no problems. Yeah, there is more expense in Arizona than there is in Manitoba. So
that's BLM land, I suppose.
It is a BLM land there. Yeah.
Okay. What about Nevada?
So Nevada's all BLM land as well.
Okay. So, but okay, but you're not necessarily planning anything on those assets either. I don't think I saw your news release for the plans for this year that didn't include anything.
No,
I don't think
so. We're moving through the permitting. Yeah, we will be drill ready at Cora, and so we'll get that one in position. Copper Eagle is not drill ready yet. So yeah, it requires a large scale surface sampling program, which is starting quite soon, and potentially geophysics. For the Leader project, we drilled that one last year. The results were strong alteration, but yeah, the metal content wasn't as high as we would have liked. So we're still in sort of a deliberation stage, let's call it, with that one about yeah, what next to do.
Good. Well, Mark, you promised me 60 minutes. I've already taken almost 75 or something along those lines.
Okay, there we go.
In my attempt to be as annoying as possible to you, what have I not been annoying about? What are annoying questions that other people are asking you? Do you think I've forgotten to ask you here?
Yeah, sure. I suppose if we just run through the things that people are particularly mindful of these days are how you run your business, how you keep your costs down, whether people have skin in the game. We've certainly covered off on that one, and we come to Canada, we come to Vancouver, and I'm sure you've spent time here. And most companies are really struggling, and it's really hard to turn around a 5-cent company if you don't have the right people or projects. And so yeah, we've managed to yeah, because we've got great experience, we've got great people, we've managed to turn to build the company in a way that's been very successful, and good projects, good people, and good money. And so as the market turns up, then yeah, I think we're super positioned. And yeah, be as annoying as you like, ask hard questions, and yeah, we're managing to sort of tick all the boxes progressively that's required for a very successful company.
Well, if there's anyone watching or listening who wants to be annoying to you, how do they get a hold of you?
Email me anytime. So msaxon@t2metals.com, or yeah, info@t2metals.com. We'll turn up on my desk as well.
Mark, I appreciate your time, and I hope we can do this again in the future. But thank you so much for sitting down with me today.
Super. Thanks, Antonio. Great to chat.